Yeah, hello. Google Q2 2026 results here they have here. So the headline restock before we dive into it, you see that revenue grew over 23%. That's to the tune of 229.7 billion. Operating income grew by 30%. Net income grew to 174.8 billion. The gap between operating and the net income is where the real rate begins. So there is difference. So ideally, the operating income growing, the net income side of things, operating income side of things, there is a big gap between it. So something happened. So let's dive into it. So first of all, let's go to the numbers. So first of all, if you look at the price, you see what price has done. This is a weekly chart of Google, which is the ticker for alphabets. So you can see that price is currently, as at the time of recording, price is currently trading around $341. The all-time high is around $400+. So it has dropped. This is what price is. So let's go to the books and the numbers. Here are they. So first of all, we look at the hold on a sec. This is loading up. So remember to always subscribe to the channel, like, share. We cover Nigerian markets. If you're not following us on X, you're missing out. So do well to follow us on X, because that is where you can get your hands on these graphics. You can load it into your okay. So this is the income statement. Yes, so this is the income statement. I guess blown it up for you guys. So you see what revenue did. So revenue, this is 26, this is 25. You see it grew by 30%. Then of course cost also went up. So the cost of revenue also went up, because sometimes naturally in business, the more money you make, the more, naturally it goes up. For research and development, of course, naturally all of them headed up, which is ideal. The only thing is the margin at which it is going up against how revenue grew. So there's no problem of cost going up, provided the revenue is consummatory going up too. Then look at where the devil's in the details is in this other income. So other income ballooned by 870%. This is now 134 billion. So this number really came off from a non-reoccurring. So they sold their stake. They had an equity stake in SpaceX. So they booked it in, and some of them are still not cash. They have not been sold yet, but SpaceX come on board, revaluation and stuff like that. So that is what added to this number, and some other equities which they didn't really display. So that's why we call this a one-off. Sometimes when doing valuation, you can strip it off because it's a one-off something. Then we have, so that is why you are seeing net income valuing to this, and of course EPS. Then, but if you look at the margins, they are pretty decent across board. So it's a pretty nice book. The margins are really, really impressive. We can't lie about it. Then this is the balance sheet. You can also see that the balance sheet, everything is looking up. Total assets growing. Of course, equity growing, cash reserve growing, stuff like that. So you see the equity are still growing. Of course, naturally liability should go up. In some situation, is it the liability arm of the business also growing? So then if you look at the margins, you see that pretty very, very, very liquid. It's a pretty nice book. No need to go around it. Pretty nice. Everything is just looking up. It's just that stripping off. Then that is looking up doesn't mean that you jump in and start buying. That is real timing, because you can actually buy a great business at an overpaid price, and that is why you wait. You now need to wait so long. See, make money. So it's pretty nice book. Then the cash flow. You see, the only thing that happened was that the cash flow dropped. Prior half year cash flow was 24.25 billion, but it's now just 4.6. Why? Because of CapEx. So they are spending more now on CapEx, and majority of that CapEx, which is here, is going into AI and data center stuff like that. So that is just, it's not much. Across board is a nice book. Then nice performance. So number first behind the numbers, stuff like that. So we can say that the revenue growth is entirely from operation. That's one. But the net income headline jump is not really operational. It's not really operational. It came off from that equity gain, which we say. Then also across board, the segment of the business, both the Google services, Google Cloud, these are the two best performing segments of the business. The Google services grew by 22%, while the Google Cloud business grew from 5 billion to 15 billion. That's over 200 and something percent. Then geographically, yes, they segmented it into 4. We have the US, we have the EMEA, we have the APAS, which is ABC, and then we have the other Americans, which is the segment. So the best performing segment is still the US market, of course, because of the demand, AI demand in the US. Then from the balance sheet side of things, there are still litigation. Most of these businesses, the problem they have is they suffer litigations here and there. Either they are suing somebody, not either they are suing somebody, sorry. There is always suing here and there. So they had this EU Android antitrust fine of 5.2 billion. Then DOJ, the Department of Justice, is still this DOJ search case still out there. Then some acquisition happened. They acquired Wiz, WIZ, on 11th of March for a tune of 29.5 billion, which they naturally folded into Google Cloud arm of the business. And there was a divestment selling of some stake in G-Fiber. Then also another thing to note is that they raised cash too, which we wrote about. Yeah, we wrote it about here too. There was a cash rate. Yes, they did that. But the question at the time was, a business that is sitting in so much cash, why are they raising money? Of course, for the AI place, they are the one doing the risk management. They know why. They didn't tap in so much. They decided to raise more. So we'll see how it pans out. So going forward, the rhetoric is this: the regulated exposure, this, you see so many charges out there. Then cap is also doubled because of the AI. So these are read up here. This will determine the next play. Then check the pricing, timing, valuation to now know if yes, of course, it's a great business. We are not trying to take side. The timing when to get in also is as much as important. Then another thing is what we earnings look like if you strip out those one-off gain which has not even been booked. So till then, see you on the next